What we have coming is a collapse of everything we have worked for and everything we've built and saved over our own lifetimes and that of our ancestors. All of our financial markets are connected and none will be spared.
Hey, Gary.
Good to hear from you.
Hey, good to hear you. How are you, man?
Doing good, feeling good.
Good. You've been busy lately?
Been writing a lot of stuff, been playing golf when I can, when the weather's good. What else is there in life besides writing and golf?
That's the attitude. You got to find some way to enjoy yourself in this crazy world.
Well, yeah, and it's getting crazier and crazier every day. I really think we're reaching up toward the reset.
Yeah, I do too. And I posted a piece in which I quoted David Stockman. He was on the Neil Cavuto broadcast. And I quoted Stockman saying that basically the end is near. And we can talk about that a little bit on this call. But why don't we just jump in? I know that listeners are eager to hear from you. Guys, Gary Christenson is from the Deviant Investor, deviantinvestor.com. We did an interview about 6 months ago about his book, Gold Value and Gold Prices from 1971 to 2021. Gary's empirical model projects a gold price of $10,000 by 2021. You know, Gary, the way things are going right now, though, with U.S. allies moving more towards China and the infrastructure investment bank that China is leading, essentially being put together in Asia, it seems like that $10,000 gold price, should the dollar collapse anytime before 2021, that $10,000 gold price could be reached sooner than later.
Well, and I have to agree with you there. You know, that empirical model I did basically said the craziness that we have in our world will continue more or less at the same degree of craziness without any completely massive disruption, like a complete dollar collapse. And the reason I did that was because more of the same is believable. The system seems to be able to hold itself together longer than anyone can believe. And so it's believable to continue, it just will project out. But if we have either a complete deflationary depression, which I find unlikely, or a massive hyperinflation in the United States, $10,000 gold is going to look cheap and inexpensive in like ancient history.
Yeah, and I think what is really alarming about what we're seeing is that on Monday, the U.S. government, the military, wanted to flex its nuclear muscles by testing an ICBM, essentially saying specifically that they wanted to show the world our nuclear capabilities. Now, I got to tell you, Gary, as a Christian person, as a person who's been worried about this stuff for a very long time, as a government that's gotten us involved in unconstitutional wars of aggression without end, as a government that is now turning the apparatus around on the people with exercises coming up this summer like Jade Helm, in which they're labeling the entire state of Texas hostile territory, this stuff, for any thinking person, scares the hell out of me, because here we have a government that literally is on its last gasp with a dollar, a world's reserve currency that other nation states no longer want, and their response is to do a test of a nuclear missile and then brag about it, saying, we want to remind our allies and other nations of our nuclear power. Essentially, that's a veiled threat in my mind. It's like a cornered, rabid dog.
Well, you know, if you're on a playground with a bunch of sixth graders, the biggest bully around is the one who has to maintain order, and every so often he has to go pound on somebody to prove he's still the biggest bully, and especially if he's a little worried. And it might be an apt analogy that we might be a big bully who's relatively worried, and so we have to go off and launch ICBMs and launch threats against the Ukraine and destabilize governments over there, and then try to threaten Russia. I mean, which just strikes me as terminally stupid, but isn't that what we're doing?
Yeah, it's absolute madness. And here's my friend Dave Kranzler from Investment Research Dynamics talking about this very issue, blogging about it today. And he quotes Colonel Moore of the 90th Missile Wing, based out of Warren Air Force Base in Wyoming. And she said this, listen to this, about this ICBM test. Quote, with these launches, we not only verify our processes and the ICBM weapon system, we provide a visual to the world that the Minuteman III is capable of striking pretty much anywhere with extreme precision, end quote. We're told that these wars are about spreading democracy and preserving our way of life because our enemies want to strip us of our liberties, when in fact it's the government that seems hell-bent on stripping us of our liberties. Is there anything more frightening than saying we provide a visual to the world that the Minuteman III is capable of striking pretty much anywhere with extreme precision? Why would they be saying that if it were purely a defensive weapon?
Well, clearly they wouldn't be. That's just a threat. That's we're going to threaten you, and so you're totally right. I mean, I have no defense to your argument. You're right. And I can't do anything about it except laugh because what do you do?
Yeah.
And you don't want to foment nuclear war, but that seems to be the process of take it to the hilt and see how much we can get away with. And when we push other countries around, and that's how international politics seems to work.
Yeah, it makes me very, very sad that this is the situation in which we find ourselves, because it's become very clear to me that, as G. Edward Griffin once told me in an interview when we were talking about money and we were talking about government-issued money, I said there would be no problem with having a currency unbacked by gold if we had an honorable government, to which he laughed and said, that's an oxymoron. There is no such thing as an honorable government. And, it was Jefferson who said, we resort to government only to protect our liberties. And here we find ourselves, really at this point, without liberties or an honorable government. I want to circle back and talk about this Stockman interview on Cavuto. Cavuto asks what all this money printing has left us with, to which Stockman responded, it's left us with $18 trillion worth of debt at the federal level. It's left us with $60 trillion worth of debt in the public and private sphere combined. He said, it is 3.5 times GDP, the highest leverage ratio in history, and it is the reason why our economy labors to make 1 or 2% growth even after all of this stimulus. I think it is getting close to hopeless. Do you agree with that statement? Are we really close to hopeless here?
As long as you're careful about the word close, because I don't mean close to imply weeks or months, but I don't see how the economy can support ever increasing levels of debt. So in that sense, clearly we are close to hopeless. I mean, just think about it. A system is a finite system with exponential growth. And that is not going to continue. You cannot continue exponential growth forever. And if you look at the national debt, just as one simple, easy example to work with, but you can use many others, it's grown in round numbers 9% a year since 1913. It's grown in round numbers since 1971 at 9% a year. That's exponential growth. And the one side of the argument is, well, if it's done that for 100 years, it can do it for 100 more. And the other side of the argument is, no, that's a lot of nonsense. It can only go so long before exponential growth outpaces the ability of the system to support it. And one good example of that is take a penny and deposit it in the bank in the year 2,000 years ago. What is the exponential growth of one penny at 6% interest per year? You think, well, what can 6% interest per year be? And one penny, how much could that grow into? A few $1,000s? And the answer I think it's got 44 zeros on it.
Right.
Yeah, it's insane. This is what exponential growth does. Clearly, exponential growth does not continue forever. And yet that's the business model that the world and fractional reserve banking is based on. Clearly, that's not going to continue forever. So in that sense, we are close to the end. And the thing about being close to the end is, as you get there, you have more and more people denying it, because you're close to the edge of the cliff and you don't want to go over it. And so people are denying it because I don't want to face that fact. And that seems to be where we're at right now.
Yeah, and let me just read these last quotes to you from Stockman, because I really think it puts a point on the conversation and it really helps define specifically where we're at. It supports what you and I have been talking about since our last interview. He says, how did we get to the point where adult, rational people could believe you could print money forever? Here's the thing. I have a close friend. He used to be a Wall Street guy. He's since purchased 2 successful businesses that he's running. He understands very well what Zero Hedge reports on. He understands very well what the Federal Reserve is. He understands all of it, and yet he still, when we go out and have a beer together, will tell me that I'm absolutely crazy to believe that the dollar is anywhere close to a collapse. He thinks that this paradigm will go on for another 20, 30, 40, 50 years, and he believes it with his heart and soul. I'm not sure how he can believe it, Gary, but he does believe it. Do you know people like that?
Oh, certainly. I'm very much a minority, and I recognize that I'm a minority, and I mostly don't talk about these things to people until they've expressed an interest in me to appreciate and understand it. And back to your friend, he, I believe, is typical, highly intelligent, capable, tuned into the world, but in denial about, and I have to call this willful ignorance, in denial about the potential of the system not to be self sustaining in the long term. And that's where people are. And why shouldn't they be? That's what they're fed every day with the media. That's what they're fed every day with television, with Fox News, with CNN, et cetera, et cetera. And why shouldn't they be that? Besides that, their livelihood is based on the continuing belief in that structure. So we should expect that they are. We'll know that things are really grim when your friend is telling you, well, I think you're right.
Right. Yeah, and I wonder when that day will come. Part of me thinks that day will come, all things being equal, right? Say my friend's businesses continue to do well. Say all things are equal, but gold jumps over $2,000 an ounce and silver goes over 50. Is it at that point that he starts to recognize that what we've been talking about is right? I wonder how much of this brainwashing is a direct result of the fact that the powers that be have done such a wonderful job suppressing the prices of gold and silver, because as long as the prices of real, honest, historical money are low, they can make the argument with a straight face that all is well.
Well, correct. And the gold and silver can be kept down to at least to some extent by paper sales on the COMEX until they run out of deliverable gold. And maybe they run out of deliverable gold fairly soon. Really, how much? China and Russia and India are absorbing lots of gold, and there's only so much in the West that can be shipped over there before there isn't any more. How close are we to that point?
Well, I think according to guys like SRS Rocco and some of the research Kranzler does,
Hmm.
it is getting very close because, well, first of all, I don't know that anybody believes that the numbers we get out of the comics are accurate. Who's to say they're telling us the truth? I listened to a webinar last week with CME Group talking about the silver fix and the electronic silver fix, the electronic gold fix, and it's a joke. I mean, they talk about this stuff as though the new electronic silver fix is purely a act in giving the most transparent price, the fairest possible market, when in fact they still call it a fix. It's a fix. These prices are not determined by the market, Gary. I mean, how do we actually know that the numbers coming out of the COMEX or the LBMA are honest? They're not going to be honest with us about what their gold stacks actually are down to at this point, what their gold supplies are down to, are they?
I wouldn't think so. I mean, it's like the unemployment numbers and the voting in Chicago. I mean, do you really believe any of that nonsense?
No.
Um, you know what they say. My dad voted Republican all his life until he died in Chicago, and he voted Democratic after that. Um, every year after that, after he died. The whole point is that these things are kind of like well-known delusions, but we still continue to believe that nonsense. And the Wall Street stuff is well, it's well managed and well manipulated for a very good purpose. You were bringing back the point of why do we have to do all this? Because it's extremely profitable to the people who are doing it. And if it's extremely profitable to the people who are managing the system, who are running high frequency trading systems, who are running the scam on the COMEX, whatever, it's extremely profitable, those people. Why shouldn't we expect it to continue until it can't? And and that's the whole issue is it will continue until it can't continue any longer. And that's where your Dave Stockman article and your article tie in is when is that point? Very difficult to predict, but inevitable and coming soon.
I find it interesting, Gary, too, that if you take a look at the Federal Reserve and you understand, like we do, what it is, it's a central bank that has control over our monetary supply. It's answerable to no one, including sitting presidents. If you Google the name Janet Yellen and you take a look at the Wikipedia page entry for Janet Yellen, you scroll down just a bit. The second picture I think you're going to see is a picture of Yellen being sworn in by Ben Bernanke, not by the president, but by the former head of this privately owned cartel. And at the end of the day, that's all you need to know. I mean, these people have so much power. The market, hinges on the latest Fed minutes or Fed meeting. And at the end of the day, they're telling us unemployment is at 5.5% and all is well. That's all you need to know about how fascist and how privately run our monetary system is.
And back to my point, it's because it's extremely profitable for the people in power, and and so they're going to continue doing that. And yes, you're right. The Bernanke is swearing in Janet Yellen because it's their game. It's not your game. It's not my game. It's their game, and it's working. Let me divert just a tiny bit here. Bill Holter put out an article today, and I want to read just the last paragraph. No, what we have coming is a collapse of everything we have worked for and everything we've built and saved over our own lifetimes and that of our ancestors. All of our financial markets are connected and none will be spared. Another aspect is all foreign markets and their economies are tied together with everyone else's. You could say we are the world. Nothing will be left unaffected. That's from Bill Holter in his article today. To me, that ties in extremely well with what you and David Stockman were just saying.
Yeah, it does. We post everything from Andy and Bill, from Miles Franklin, along with all your great stuff too. And that is really probably the most important thing we can talk about in this conversation, Gary, is driving home the point that all of these markets, all of these financial instruments, all of these stocks, all of these bonds, everything is interconnected. And if you don't hold a tangible asset clear and free in your own possession, you may lose it all. I think that is the hardest part of this story to explain to people, because as they look at their burgeoning 401ks, as the stock market roars only higher, as they look at their brokerage account statements, they feel good, they feel wealthy, they see ones and zeros on paper. Some of the neighbors I have are turning them into Porsches, and some of them are turning them, they're turning these ones and zeros into real tangible assets, which they should probably do at this point. But for those that are just watching those numbers grow on a screen, the point is everything's interconnected. If and when the system implodes, they could lose it all because they will be standing in line as a creditor, correct? As a creditor.
Correct. If you deposit money into a bank, it is no longer your money, as we were brought up to believe. You are now a creditor of the bank. It's a liability of the bank. And if the bank fails, you're in line along with all the other creditors who may or may not get paid. And I would remind everybody of Cyprus in 2013. If you were standing in line waiting to get paid out of the Cyprus banks, it's a long wait. And if you look at the PE ratios, all those sorts of ratios, the Buffett indicator, the stock market capitalization versus the GDP, those are all flashing warning signals also. And again, as Rickards says, when's the one snowflake that's going to start the avalanche going to happen? You can't say when that snowflake is going to happen, but all you can say for sure is there's an avalanche ready to happen, and it's the result of exponential printing of phony money. And that goes back to your point about if you don't have it in your possession, it may not be real or it may not last very long. And it's great while it lasts, but that's like they say when you're jumping off the Empire State Building, you're passing the 30th floor. It's so good so far. Yeah. But it isn't necessarily going to be so good so far for much longer. And that's why if you are living in the world where you depend upon this, it's so good right now, you don't want to see that there's risk out there. And there is risk. You don't want to look at the risk. You don't want to look at that. You want to live in denial and say, oh, no, it's going to continue forever, like the friend example that you gave, and which is most people in the United States and the world. Perhaps not in Cyprus, perhaps not in Ukraine, perhaps not in Zimbabwe. One of my favorite things is a $100 trillion reserve note of Zimbabwe dollars that I keep in my desk drawer to remind me of inflation.
Yeah, I have one of those too, and I didn't have to live through the hyperinflation in the Weimar Republic, but as our friend John Williams from shadowstats.com has been saying, for as long as I've been following him, he has projected that 2016 will be the hot year for the dollar in terms of starting to see massive inflation, and as he sometimes has said, hyperinflation. Do you see that day of reckoning coming anytime soon for the U.S. dollar and those who hold dollars?
Well, I do. If you look at a dollar chart, you can see that the dollar hit a temporary low roughly May of 2014, and since then it's gone up from the low tick to top tick. That was on Friday the 13th of this month was the top tick. It went up 27%. Now, this is a currency. A currency index went up 27% in less than a year. That's clearly a parabolic move. And, parabolic moves have a big history of correcting and crashing.
Yeah.
So I really think that the dollar has, hit its peak. And then the Asian bank that you were talking about, the AIIB is a good indication of the world moving away from dollars and the dollar standard, and China making all these currency swaps, selling the yuan all through Europe. These are all things that move the world away from the dollar, and that encourages the dollar to come down at some point. And Martin Armstrong, who I have a great deal of respect for, talks about one of the major turning points as October 1 of this year, more or less. So he's talking about third quarter, fourth quarter of 2015 as a turning point. That could very well be the beginning of the end for the system.
I worry about it. The parabolic move we've seen in the dollar is a good point. And I wonder if we shouldn't compare the graph of the rising dollar in that parabolic phase that you're talking about to Bitcoin that rose so powerfully from pocket change up to, I think, $1,000 or more, or near $1,000, and has since corrected some 75-80%. I wonder if that isn't the future that we will see for the dollar in those that hold it. And I'd hate to live in a big giant city when this thing falls apart. You can really paint a picture for a Mad Max scenario, which is extremely disturbing, can't you?
And then you ask, why are people in denial? And listening to you, it's like, oh my God, I can't deal with that. I cannot deal with those things. I'm going to go back and watch what the Kardashians are doing.
Yeah.
Because you want to live in denial because you can't deal with those things. And I'm not saying that's just a normal human response. The problem is that it's a normal human response that doesn't have a high survivability quotient.
Well, let me ask you this, Gary. In the short time we have left with you, you've done so much great work in the gold and silver space with your analysis there at deviantinvestor.com. Why don't you tell people what you see for silver at $16.90 or so an ounce and gold at $1,190 an ounce? Those are prices that reflect an asset trading below its real value in terms of mining costs. What's your opinion on silver and gold at these prices? Are they truly a steal?
Well, in my opinion, they're truly a steal, and people should be accumulating as much as they can every month because the prices are low. My model says that the price for gold should be $1,527. So let's just call that 1500s. That says that the price of gold is way too low, and without doubt, the price of gold has to go up much higher. If you just do long-term scenarios, the price of gold roughly parallels the amount of money in circulation, and that roughly parallels the national debt. 9% a year is exponential growth. So, that doesn't even count hyperinflation, dollar crashing, any of those kinds of things. It just tells me that the long-term prices of gold and silver have to go up. And right now, we have been crushing the price of gold. We've been crushing the stocks, the bonds, the stocks for gold and silver companies. They're not able to mine as much. Supply is flat, and demand is huge. So it's only a matter of time before the paper control of the prices is lifted. And at that point, they might get really scarce and the price might get really, really high. I don't see that happening in a month or two, but I certainly see that happening in 2 or 3 years.
Yeah, and to remind people, your empirical model projects a gold price of $10,000 by 2021. What does that empirical model project for the price of silver, Gary?
Well, that was it's a slightly different model, and I had fuzzy numbers on that, but several $100s for the price of silver if gold goes up there. And when I say gold going to 10,000, that was in the 5 to 10,000 range. I put $10,000 as a non-hyperinflationary reasonable peak for that period of time, and I still stand on that. With hyperinflation, it's going to be a lot worse. And silver has got to be somewhere in the the $200, $300, $400 range, and possibly even higher than that if we have a real shock in the system. So those are prices that are real. You know you're not going to get bonds going up by a factor of 3 or 4 or 5 in the next few years. You're not going to get the S&P going up another factor of 3 or 4 or 5, but precious metals certainly could.
Yeah, and that's priced in dollars, guys. I know that when we live in this fishbowl, where the dollar is all we've really ever known, it's hard to believe. But what Gary's saying is those will be the prices when valued in dollars, because the dollar will not be the world's reserve currency forever. It's been abused for far too long, and there are too many other nations with whom we used to partner who are now actively turning against this dollar paradigm because they too are disgusted by the abuse this government has shown the dollar. Gary, can you remind people where they can find you online, and please tell them how they can get your book or books? You've written more than one.
Well, certainly, and my website is www.deviantinvestor.com. And you can also find me on a lot of other places, GoldSeek and 321 and Gold and so on. And the book I've written is Gold Value and Gold Prices from 1971 to 2021. Clearly 1971 when Nixon took us off the gold standard entirely. And that's available on Amazon or at gechristenson.com. I encourage people to go out there and read other gold books and read what other people have to say. I just have my opinion. It's an empirical model. It's relatively unusual. You don't see other people out there, but it produces a plausible set of numbers. And then I also talk about other facets of gold and the Federal Reserve and counterparty risk and all that in the book.
Well, your site's great, Gary. We post your articles every single day at SGT Report, and we sure do appreciate all you do. Thanks, Gary.
Thank you very much.
Thank you. And guys, thanks so much for tuning in. Thanks for checking out Gary's site at deviantinvestor.com. And of course, thank you for supporting us at sgtreport.com and the Liberty Mill. Real news 24/7, 365. Thanks for your support. Thanks, Gary.
Okay.
Bye-bye.
Bye-bye.